I was browsing through your book, and obviously you look back at the last 500 years, it was the currency of the superpower in place that was the reserve currency. Back in the 1930s, last century, about 100 years ago, it was sterling, then it went to the US dollar. How does that all inform you of what happens to the US dollar next?
Well, the sequence is very clear. The first thing happens is that you put a lot of credit, a lot of debt, and a lot of money, and it devalues it relative to other assets. So if you look back in the 1933, I said March 5th, 1933, or if you look back throughout history, that move puts money into the system, devalues the currency, and causes stocks, gold, and other reflation assets to go up. So that's what we're seeing. And so when you look at history of those, there were three major currency empires. The Dutch and the Dutch guilder, followed by the British and the British pound, and the US and the US dollar. And they have to do with which are the largest trading countries, because they bring their money around the world. And there's that cycle. And that cycle now is having China is now the largest trading country. And you're starting to see the development of capital markets in China that are open to foreign investors. You're starting to see, you will see the internationalization of the renminbi. You will see opening capital markets. You'll see the development of the financial center. That is all part of that pattern that's happened over and over again. I don't believe the renminbi will be a viable reserve currency quickly, but I do believe it'll happen much faster than anybody expects. So if we were to take the next 5 years, the question is, what is the storehold of wealth in the meantime? And that's why you're seeing the movement into other financial assets.
One thing that constantly comes up, with the world looking to start increasing their exposure to China. I mean, it's an issue with some, it's not an issue with everybody, is the debt issue. And obviously part of that progress, there has been, a decent amount of debt that's been built up. Do you think, Ray, China has a debt problem?
The basic rule of a debt problem is it in your own currency or not? If it's in your own currency, there are lots of ways of dealing with it. You can restructure it, you can monetize it. If you take a debt, typical write-down of debt is something like 30 or 40%. If you take that debt, you put it on the government's balance sheet, and you write it down at 2% a year, it's not a problem. You renegotiate the interest rate. If you can control it in your own currency, it's all manageable. Japan is a good example of that. So, no, I don't believe that it has an unmanageable debt situation.
Do you think the policy-making structure, one-party system, to a large extent, the low risk that policy does not change every couple of years, do you think that sets China or gives China an advantage over the United States?
It certainly has a lot of benefits, right? It has the benefit of, first of all, they can hire quality leadership. It's not a random popularity contest. And then it's run, I would say, like a company's run. It is a big corporation has the leadership and that process being run. And so it does lend itself. Let's say handling COVID, for example, was, I think, exemplified the ability to have order, have behaviors. People are not fighting with each other, and it becomes as disorderly as democracies. In conflict periods or stressful periods, there are those advantages. But like Plato pointed out, there are these cycles, and over a long period of time, no system lasts forever.
You mentioned earlier that the world is structurally underweight China. How do you make that work, and how do you make that work without overstepping, obviously, into parts of the market that perhaps in China that aren't as mature yet?
When I look at China and the opening up of the markets, I do know that I have to have a significant portion of my portfolio there, just like I have to have a significant portion in the United States and so on. But the interest rate differentials are favorable. The growth rate differentials are favorable. A big element is going to be order, internal order. So far, that's pretty favorable. So when I look at it, it's that element of diversification and then make the comparison. I'd much rather own, for example, Chinese bonds than to own U.S. bonds. The currency, I think you're going to have favorable capital flows as they open up. So for those reasons, tactically as well as diversification-wise, I would do that. But it's not just in China and the United States. There's a whole world out there. In the Asia Pacific region,